Kia ora, everyone. This is my attempt at making a short video on the tutorial which is looking at the income capital distinction. Now, you were asked to discuss whether or not certain payments and receipts were income and capital made from depleted resources petroleum to Hector Bright Limited and also Cars R Us. The first comment that I would make is that in any answer when you're looking at this particular topic, it's really important that you go through the tests that are outlined in cases like BP Australia, LD Dathan, Trustpower. It's also, some of them are in Hellstroms and Sun newspapers. So you've got plenty of choice, really. I would start an answer by looking at those tests, in fact, and then applying the particular tests that are relevant to each scenario, rather than repeating the same tests over and over again. Not that that was actually a problem in your tutorial answers. One of the issues that came up in the tutorial answers was the fact that people failed to go through some of those tests and kind of concentrated on things that were actually least important. So let's just start at the beginning. The first thing to ask yourself is, what is the need or the occasion which calls for the expenditure? Why are you making the payment, or why are you receiving the money? Is it an ordinary payment or an ordinary receipt in the regular conduct of your business for earning profit, or is it something extraordinary? The next thing that I think is really important is to say, well, has this actually had any kind of impact on my business structure? Now, for example, in the payment that was made from DRP to HB, the 253,000 payment, the advantage for DRP was that it eliminated a disadvantageous contract for them. It meant that they no longer had to have just this one exclusive agreement. It meant that, in fact, they could enter into different kinds of contracts with different retailers. So for them, it was definitely something that impacted upon their structure. Now, structure, I think, business structure is probably one of the most important tests. The other test that's really important in New Zealand is enduring benefit. And in BP Australia, they looked at the time period of this benefit, and they came to the conclusion that 5 years was neutral, but anything above that was likely to be capital, and anything below that was likely to be revenue. So if you look at the 50,000 payment made by DRP to HB, the contract for entering into the Class B contract, the 50,000, that was for a short period. It was only for 2 years, which sort of indicates really a revenue nature, and therefore an implication also that it would be a recurring payment because they would have to enter into contracts again. It was a small amount, not a huge amount of money. It gave some exclusivity to DRP. It meant that, but in terms of securing retailers, it was probably an incidental payment to the running of their business and the ability to sell their petrol products. So in that case, that was probably revenue. It didn't have a huge impact upon their structure. There was no long-term advantage to DRP. Another test, of course, which I mentioned there, is the idea of recurrence, and that's where you would ask, is it one-off, is it a recurring payment? Because, of course, if it is recurring, it has the features of income. Another of the tests, of course, is the fixed and circulating capital test. Now, I try to explain that to students by saying anyone who's had any accounting background would know that things that appear in the balance sheet, like the assets and the liabilities, tend to be things that come from fixed amounts. Why? Because it's either a capital contribution by the owner, so proprietorship, or it's in the form of a loan, some sort of borrowing that has occurred, whereas things that are in the profit and loss tend to be the circulating type of expenses. So that's your wages, your rent, your electricity, and so forth. It's not a perfect test. The judge in Melbourne, for example, didn't find it useful at all. And I think that's largely because a lot of people, including some judges, don't really understand the test because it's more of an economic concept rather than something that relates directly to tax and law. Um, Another aspect which kind of relates to the business structure, which is also part of the tests, is to think about whether or not there has been some kind of advantage gained by the payment that's been made or the receipt that has been received, the income that's been received. So I think that ties in a little bit with the enduring character of whatever's taken place. It's not really a repeat because you are looking to see whether there has been some kind of definite advantage to the business that has either made the payment or has received the money. Then another test that can be looked at, and it's not hugely important, but it's interesting and it could be used, is how would this amount that was either paid or received be treated by an accountant under ordinary accounting principles? It's something that's discussed in BP Australia, and actually in terms of that particular case where they were looking at trade tying, everybody was just starting this at that time, so it was seen to be on revenue account. But we have cases that have been subsequently discussed, which like City Motors, Napier Motors, Birkdale, which in fact have found that these kinds of agreements or contracts relate to capital. So I think I've gone through all the tests, and then now what you can do is look at applying those tests to the particular facts that you have to discuss. And this is where your case law examples are very important. But be careful. Don't use cases that belong to other parts of the course. There were a few of these used in some of the tutorial questions that I marked or that I looked at, and you need to be very careful that you stick to the capital revenue case law. You've got plenty to choose from. Now, Sun newspapers and Hallstroms are two cases, or Hallstroms are two cases which discuss some of those very tests that I've just mentioned. But the leading case is BP Australia because, in fact, that particular case discussed all of the tests. These are repeated in LD Nathan, and they're also repeated in Trust Power. So I would suggest that those are good cases that you could use to refer to if you were looking at the capital revenue distinction. Now, it's important not to repeat yourself again and again, because if a marker is looking at marking a particular question, they want to see that you've actually thought about the issue that arises in the particular scenario and that you've tried to use some other case examples to illustrate what you're trying to argue. Please don't get hung up too much about getting this right or wrong. There may be some comment made about the right answer, but that's not the most important. I can assure you, experts in the field of tax law argue over whether a payment is capital or revenue, and there are a number of cases which you can refer to which demonstrate that. One other principle that you need to be aware of course, is some of you have relied heavily on the once for all payment or the one-off. Just remember that Meyer Emporium case where it shows that you could have a one-off payment, but it still could be on revenue account. And it's because of the other aspects of those tests which in fact take over or are more important. Now, as far as the payment for the $2 million to Cars R Us and the exclusive agreement that was entered into, the Class A agreement by Cars R Us with DRP, you needed to note the fact that in the contract it said that this payment was meant to be used for outfitting. And that makes a lot of sense because there would be rebranding required, possibly new pumps, possibly changes in the signage and so forth. and that gives the nature of the payment a fixed aspect, i.e. we're looking at balance sheet again. Only one or two students actually noted the application of section CG8 and or DB64. That gives the ability for a capital payment to be actually spread over its life, which in turn means you're actually treating it as a revenue payment. These two sections really should have come into an answer in this tutorial, particularly in relation to the payment received by, or the receipt, sorry, by Cars R Us, because of course they would have therefore had the ability to spread it either through depreciating that payment, particularly if it was used in some kind of fit out or outfitting of the business. Yeah, I think that's about all I have to say. There have been comments made, hopefully on the tutorial answers that you've received, and you do need to be aware that it's a matter of trying to apply the question using the tests that you have been given. Much better to discuss them at the start and then take individual tests out to apply to each particular part of the question. Okay, good luck.